Here with more Rosenblatt's Barton Crockett, we can talk about what the coming quarter may bring. Barton, good to see you again. You know, I wonder whether or not you think the dollar is going to be a really important story for Q3. It's certainly getting a lot of conversation over the weekend.
I mean, certainly there's going to be some headwind, I think, for numbers for the internationally, particularly European-focused companies. I think that's the type of thing that you want to try and look past. I mean, hopefully what we're seeing now is not something that's going to continue to trend down. Hopefully we'll stabilize. Currency tends to be something you want to look past, but clearly there's some noise and risk to numbers around currency as we, update models into the end of the quarter.
Right. So when you say stick with blue chips, I mean, not that those were your words, but what exactly do you mean?
Well, what I think we're looking at is an environment where it's more treacherous than really any time in many years to own tech, right? You've got valuation risk around higher interest rates, around slowing growth. You've got a plethora of kind of new secular challenges, emerging, let's say, in advertising with competition from TikTok, new competitors getting into internet advertising with Netflix, Disney Plus, Amazon, even Walmart ramping up. So you have a lot of things to consider, but you have to own tech, right? So tech is the future. And so the question is, how do you navigate that? And I think, you want to stick with, have some exposure to some of the best names at a reasonable valuation. And in my book right now, that's someone like an Alphabet, which of course has exposure to advertising, which of course is economically exposed. But I think, if you're willing to look longer than the next couple of months, this is a company that's here for the long term and at a great valuation. You can own it for search, you can own it for YouTube video, you can own it for cloud, you can own it for equity investments and things like Waymo. So, I think that's one of the blue chips that you really want to be thinking about when the markets give you these kind of pullbacks.
But Barton, do you want to own those or be buying those on a day like today, or do you want to wait until you get earnings in the next couple of weeks?
I think it's okay to own them now if you have any type of time horizon. I mean, I think that clearly there's risk, increasing risk as we worry about the macro into the earnings reports. That said, the stocks have reflected a lot of this already, and I think that you could be looking at a sell the rumor, buy the news situation. So, I don't know what the macro is going to be. It could be that we have a brief, dalliance with kind of a slowdown that's not even a real big recession, or could we have a terrible recession? That unknowable means that you could miss an opportunity if you wait too long. So I think try not to be too cute, try to get great names on pullbacks, and your safety net is that you're buying them at a good valuation and you're buying a good business that'll be here for the duration.
Speaking of pullbacks, Meta today eyeing 140 now. It's pretty unbelievable, the decline. Obviously cutting expenses. It doesn't sound like you believe there's a lot of operating leverage to be had.
Well, my problem with Meta is really that kind of secular competition issue. So TikTok, I do think that it is clearly the case that not all media trees grow to the sun, and Meta is used by, more people on the planet than anyone, but that isn't an argument for growth. And I think it's in fact an argument for something else picking up some of the momentum. And I think we're seeing that in TikTok. I think this is a company that at that, time that we're seeing this challenge is also distracted by, the transition to a metaverse, which, I'm not sure anyone is really a believer at this point on the, certainly on Wall Street, that's going to pay dividends in an investable time frame. So, yet you can't challenge management because of the control structure. It's hard to own media stocks when you have audience pressure, and you clearly have audience pressure on the core Facebook property. There tends to be no multiple that's too low when people worry about the sustainability of audience. We've seen that in traditional media with, the Viacom CBS of old. Now Paramount, is a different story. But, I think those are why Meta continues to plumb new depths in terms of the multiple that it can trade to.
Yeah, that's a good summation of some of the challenges that Zuckerberg is facing. Barton, really good to see you. Thanks so much.
Great. Thank you.